The gaps will not be filled completely all the time, and that's fine. Even if the market fill the gap up to 50%, it still fulfill the criteria of entering on the basis of fair value gap. So let's suppose we are having a fair value gap that is only filled 50%. Then we will call it consequent encroachment. That is consequent encroachment of that fair value gap. Now, what does it indicates? It is indicating that the market is in a hurry. It wants to move to a certain point. It wants to reach to a certain point. So for that purpose, the market didn't have time to fill the gap completely. So it is not necessary that the fair value gap will be filled up to 100%. Even if it gets filled 50%, that's fine. We will get enter in the market on that criteria. Let's suppose we are having these candlesticks. So from the high of the first candle and from the low of the third candle, that is our fair value gap. That is our fair value gap. The 50% area of the gap is consequent encroachment. It is CE. So let's suppose if the market makes few candle above the gap and then reverses and fill the gap only up to 50%, and from that point we can enter in the market. We will place our stop loss below the low of the fair value gap candles. That is our stop loss point. And now it is a strong indication that the market wants to continue its bull run up to the upside, and it will start climbing quickly into the direction of the uptrend. So it was consequent encroachment. Now let me say it again. The 50% point of the fair value gap is consequent encroachment. Whenever the market is in a strong uptrend direction or it is in a strong downward direction, in both cases the market gives opportunities that it fills the gap up to 50%, and from that point the market starts continuing moving into the direction of the trend. That is consequent encroachment. It simply says the market doesn't have time to fill the gap completely. It is in a hurry, it has urgency, and it wants to leave that area as quickly as possible.
Consequent encroachment gave an impression that the market is in a hurry. Whenever the market doesn't fill a gap completely, so it is a sign that the market wants to go to the direction of the trend, and it does so strongly that it doesn't even fill the gaps completely. Let me show you the example in the current Euro USD chart. This was a gap, right, from this low to the high of the third candle. This was a gap. This is the 50% level of the gap, and you can see that how the market just filled the gap of the 50% and quickly reversed and continued its down run. That's what the market does when it wants to reach a certain point, and that too in a fast and quick manner. That was the example of consequent encroachment. Let me show you other examples. I hope we find the examples in the near market. So yes, I found one. First of all, we have to measure the wave, right? We measure the wave in the downtrend. The level or the area above the 50% of the level is premium. Above the 50%, above this point, we are having premium level above the 50% level, premium area. So we will only look for the fair value gaps in the premium area. In the premium area, one fair value gap we are having at this point, right? The second fair value gap, let's have a look at that one, which is at which is just below the previous example. That is, and let me mark the 50% level clearly. Now let's remove it and let's see what the market has done. The market has just filled the gap a little more than the 50% level. That is also consequent encroachment. But look at the candlestick's body. It has not closed about the 50% level. And then see how the market quickly reversed to the downside and took these lows. The market took these lows, right? It cleared the liquidity, it did the liquidity sweep and then reversed. That was the example of the consequent encroachment in the market, right? I hope you have got the idea of consequent encroachment. Here I found another example. After creating this lower high as compared to this high, lower high, the market made a gap, which was this gap, right? Now let's see what the market has done at this point. Let's mark the 50% level clearly. Now remove the shaded box and you can see the market has again just filled the gap 50%, and then we saw how the market reversed in a speed, in a quick manner, that the market never went to that area again. That is consequent encroachment. And you can have lots of opportunity, you can get lots of opportunity, especially in the trending markets, when the market is trending strongly in the uptrend direction or strongly in the downtrend direction. You can find examples, opportunities in both of the markets of consequent encroachment.